Hey Joe, how you doing?
Mate, I'm okay. I am very, very good. How are you doing?
Good. Yeah, I'm good. It's been man, I feel for the first time in a while, and bear in mind, we've had busy weeks. It's been like non-stop in the markets, right? But like today, I feel like it's hit me. I just feel drained. Like we just don't stop producing good content, right? We just doing it literally every single day, living and breathing it with everything that's going on right now. So I think it's catching up to me.
Yeah, mate, literally the same. Like when I was doing the US rundown, I pretty much, because so much had happened, I had to basically rewrite it completely again. And when you have to do that every day, it's just mad, isn't it?
I know, it's true. It's so true. Like the markets are, we were just saying, right? They're just incredibly choppy right now, aren't they? Like, it's insane. Just
really choppy.
1 minute we're going, big flows in dollar, and the next minute dollar's tanking. It's choppy. And it's been like that for 1, 2, 3, 4, 5, 6, 7, 8, like 9 weeks. It's been like this.
Yeah.
Yeah, so,
I know, and as long as US-China tensions continue to rise, I think we've just got more and more of this, really.
It's true. No, you're right. It's I mean, look, let's just jump into this. We've got quite a few things to talk about. To be fair, a lot has happened again, like a lot. Let's start off with the RBNZ, the Central Bank of New Zealand, and I think that was quite an interesting rate decision, don't you? In terms of
mate. Yeah, it's super interesting one, and NZD got absolutely slammed, and that made for a great blog earlier on in the week. Yeah, basically, the big increase to their QE program as expected to 60 billion Kiwi dollars, but then there were some really dovish aspects in the report. So there was a hint towards FX market intervention. So that might be where the RBNZ comes in to try and weaken the Kiwi dollar to try and give the New Zealand economy a bit of a boost. And then what was the other thing? They also hinted at debt monetization, which is a really dovish thing where the central bank lends directly to the government.
Yep, and you're forgetting the negative rates, bro. Left the door open for negative rates. That was like the huge part of that, man. That was insane. And on top of everything that you said anyway, it's all so dovish, ultra dovish. And NZD got slammed. Some 90 pips there. It's a big move. And bear in mind, sometimes, like typically, your Kiwis and your Aussies are slow movers. But that was a big ass move for NZD.
It was.
You got to think now going forward. The markets could gradually be pricing this in, but you got to think with that risk there. Every bit of data is going to be heavily scrutinised now for NZD. So, one bit of bad data, the markets will look at an excuse and they're like, negative rates, sell NZD. Every rally or pullback you see, sell NZD, because of the underlying fundamental there, that risk, right?
100%. And just the other thing, like if obviously NZD's got its risk sensitive characteristic, but if we do see a bit of risk on, we'll probably, because of this fear of negative rates, we'll probably see NZD continue to be a laggard, even if there is risk on. Yeah,
that is true.
It's not looking good for NZD.
No, you're right, because of course, I'm sure you're sort of pointing onto there anyway. But at the end of the day, they're exposed to US and China. Australia, New Zealand. Oh, I just got you on the screen. Australia. Australia and New Zealand are, China's their biggest two-way trade partner. So that's they're sensitive to all those developments with US and China, aren't they?
Exactly. And there's like we already noted this, but there's been so much news flow on that front this week.
Loads. Incredible. All right, that's the RBNZ. Let's go on to dollar, because as we say, dollar's been choppy. It's been choppy. Look, at the end of the day, it's had a strong week. We know why. One, I think we've got to say the big factor has been Jerome Powell, right? Jerome Powell.
Yeah.
Ruling out that chance of negative interest rates, didn't he?
Yeah, exactly. That definitely gave dollar a boost, and that gave risk appetite a bit of a knock at the time as well. Yeah, that was Wednesday, wasn't it?
Yeah, it really did. Stocks were coming off on that as well. I think gold was gold took a hit initially, but then it just carried on in its own well. We'll get to gold in a moment anyway. But I think, because bear in mind, markets had been pricing in that chance the other week, didn't they? Remember, because you picked that up quite quickly for our members.
Yeah.
The risk of that being priced in, that was way on the dollar. So that was a nice bit of relief rally, and that got the dollar certainly on its way to the upside there. And then the other reason.
I do. It was old Trumpy boy.
Yeah.
Trump came out and he was like, he was talking about how it's a great time to have a strong dollar, which for him, that is a big change of tune, because I'm sure you'll remember, and like all that, and people that have been in FX markets for a while now, they'll remember Trump last year and in 2018, he hated the strong dollar. He was always going on about weakening the dollar to help exporters, all this kind of stuff. So
I know.
Yeah, big change of tune from the president.
Yeah, big change. I think as well, he's just, what it is? I think where he's, he was calling negative rates and he wanted the Fed to be ultra dovish, so on and so forth. Like, it wasn't really having like a massive impact on the dollar. So he's just like, do you know what? I've just got to accept it now and just cling on to the fact that, we've got a strong dollar, and embrace it.
Yeah.
So
yeah, that's actually a really good point.
Yeah.
He's probably thinking about how cheaply he can just like buy, because he's a billionaire, isn't he? How cheaply he can buy stuff all over the world. It's actually good for him.
Yeah, exactly. It's true. So so all right. So that we had that, and then I think something that's been quite interesting. Actually, we'll save that one for last. Let's go on to oil. Oil markets have continued to recover this week. It's funny because I did a good bit of technical analysis on the back of your Saudi one. Your Saudi blog, where we were talking about how they're going to cut production, and oil's ran into a big area of supply at $29, and if we're able to break that, we're going to fly. We're going to continue to fly. But what's the story? What's the story at the moment, oil?
Well, there's a few things. Like you said, you just mentioned the Saudis. They did an extra 1 million barrels per day in additional cuts on top of the 3.8 million that they're already doing for OPEC plus. So that's just more oil supply being restricted, because in the last couple of weeks, the restriction of oil supply has definitely been a big theme, because these low prices have been killing producers all over the world. So, the Saudis definitely helped pump oil this week. What else was there? Trump talking about, he was pumping oil a little bit as well. US inventory data. Basically, we watched that to gauge demand for oil in the US. That was pretty good as well. And I think that off the top of my head, that's all I can remember for now, because there's been so many of them.
And what you got to think is, obviously at the end of the day, all these governments are easing lockdown measures now, so demand for fuel's naturally going to come back, right? We've seen that overnight in China, some Chinese data. Fuel demand's up 11% again, as given those easing of lockdown measures. And China, remember, they're the second largest importer of oil, aren't they, China?
Yes, definitely.
So it all helps, and realistically, you got to think now with all that, as I just noted, and what you said, it's only got to go up from here. Surely, it only makes sense, right?
Agreed.
Yeah.
It belongs WTI. That is, I think it belongs somewhere in the mid 30s. Really.
Agreed. So we've got that oil, and then something we've just seen this afternoon, which has been huge. GBP being slammed. And man, that shouldn't come as any surprise, should it?
No. We were actually talking about this morning, weren't we? As expected, or no, we were talking about how we do expect these talks this week between the UK and the EU to have gone badly. But obviously GBP was expecting something, because it got, like you say, it got absolutely slammed. Man, we've been warning people about this for weeks, literally weeks, right? Yeah.
We have. I think we've done we must have done over the last few weeks. We've done at least 4 blogs on it, giving people the heads up.
Yeah.
So, man, so what happens now, you reckon?
Well, I think we've been saying this in the blog every single week. I think this is going to go down the wire to the end of June, because the end of June is that deadline to get an extension to the transition period, which ends at the end of the year. So both sides, how the EU works, they love to agree everything at the last minute, and that's generally how negotiations go anyway. So I think everything's going to happen at the end of June. And it's either going to be an extension or a massive GBP sell-off and a big scramble to try and get a deal before the end of the year.
Agreed. So for me, as I continue to say, sell GBP rallies, baby, because that is a big fundamental problem.
Definitely.
Joe, what we're looking out for next week? What's the big stuff?
Oh, well, so let's stick with GBP. We've got a lot of UK data coming out next week. So, what is it? Off the top of my head, labour market, retail sales.
Yeah.
I'm not saying this in order. CPI, and there was one more, PMIs as well.
Oh, some big data points there, baby.
Big data points. And then, obviously, PMIs, it's not just the UK, it's EU PMIs. So these are the preliminary ones. So the ones that move the market. Yeah, I can't say that. US PMIs as well. So, those PMIs are on Thursday and Friday, so that should be good.
A lot of juicy stuff there. That's fine. And on top of all these themes that we continue to be blessed with anyway.
Definitely.
All right, bro. Well, another good week. Other than that, let's get it.